Okay.
Hey, good afternoon, everybody. This is Jeff Gaudette coming back at you, Solve for X Financial. And I'm really excited today. I'm actually joined by a good friend of mine, Trevor, and he's out in Utah. And we both do our best to not sound like we're from the respective places that we're from. I think we both do a pretty good job of that, Trevor. But I wanted to invite him on today because he's actually a reverse mortgage specialist, which is a very unique niche inside of the mortgage world. And I had a great conversation with him recently, and he was kind enough to come on and talk a little bit more about that. So, Trevor, I just want to invite you to the podcast, and thanks so much for coming on.
Yeah, absolutely. I appreciate it, Jeff. It's obviously something I love talking about. I started a company around reverse mortgages, right? And I've loved, as you and I have talked in the past, it's fun when you can find a product or a service that is life-changing for people. And I know that you have lots of that in the products that you serve. And for sure, that's what I found with reverse mortgages too. So
That's interesting. So, I guess if you would do me the favor, and for everybody who's listening, can you give us a little bit of background? Did you, prior to reverse mortgages, what were you doing?
no, for sure. So I'm actually I've been in the mortgage industry. I started in 2006, and so I got into the industry just as we went off a cliff. And to be honest, those first 5 or 6 years were brutal. It was everything I had to stay in the industry, but I love the industry. I love working with people. I love helping people financially live better. And so it's always been something that's held on to me. So from 2006 up until about 2016, I was your run-of-the-mill loan officer, VA, FHA, conventional financing. Excuse me. It was around 2015, 2016 that I began to dabble in home equity conversion mortgages or reverse mortgages. And as I mentioned a moment ago, it just caught hold. And I was finding that for the few people that I was doing these loans for, the results were absolutely life-changing. To take somebody who is at a stage in life where they have limited options and opportunities for financial betterment and absolutely turn their finances around, it was absolutely it was eye-opening for me. And so I made the leap in 2016 and said, you know what, I'm going to do this and only this and nothing else, and started this company. And so for the past 7 years, this is what I do. This is all I do. So
I love it. I love it. And to just build on that, just for everybody who's listening, it's such an important piece. And I'll tell you that it's such an important piece to have somebody who specializes, right? Because those folks who dabble in
mhm.
reverse mortgages today aren't the people I want to be sending my clients. I want to be sending them over to guys like Trevor who know exactly what it is they're talking about, because there's a lot of moving parts. And I think, as you had mentioned, earlier in your career when you started getting involved with reverse mortgages, I think that's around the time when there started to become a lot of bad talk about reverse mortgages, right? So a lot of misunderstandings, or people who were dabbling in it that maybe had given it a bad reputation. Can you tell us some of the things that we hear today that we think that we know, but maybe just ain't so?
Oh, for sure. I'm happy to cover this. So the product of a reverse mortgage was put into law by President Reagan in the late 80s. And the idea initially was, okay, there's a small segment of people in our country who are financially destitute. They own their home. They have no income. How can we help them? And so this product was created. Let's let them use the equity in their home. They'll live in the home. They'll take money from the home. And then when they pass away, the bank will take the home and sell it. And the problem is that for the first 25 years, 30 years-ish, that area, the loan was kind of a train wreck because it was designed with the bank in mind. And the problem with the old loan is that it didn't always protect both homeowners, right? And so you'll hear stories about how grandpa died and grandma was evicted. And that's a terrible situation, right? The other thing is that the loans were designed to have high loan amounts and high interest rates. And so that when the homeowner passed away, the bank essentially inherited everything. The bank got the home, they got all of the equity that was in the home. And so you can see, for obvious reasons, that it was a train wreck. It's no wonder there were bad reputations surrounding this product. But fortunately, it was right around 10 years ago, FHA really wised up and realized, hey, we need this product to help Americans age better. We got to fix it. And so they began making some pretty aggressive adjustments to the product. And so when I talk to people now and I explain to them what is a reverse mortgage today, they're completely caught off guard. They're like, well, that isn't anything about what I've heard in the past, right? That has nothing to do with what I've heard about these loans. So
Yeah. Yeah. And it is such because I like to look at everything, and, everything that we have is that we've got this amazing toolbox today of obviously the way that we can help folks. And it is amazing. And the way that you're able to explain that, I think is such an important piece, because it's not just, you do have to deal with the things that they've heard before.
for sure.
You can't blow by it. You have to address it and say, these are the things that, this is the way it was designed. This is how it felt. And this is the reasons why they've made the changes that they've made. And today it's such a valuable resource. And I'm glad that you're able to help people with it. Let me ask you, so when people are thinking about it or considering that, who's like the perfect person? What's the sweet spot for a reverse mortgage client?
Well, this is interesting because, I work with clients on all sides of the spectrum. I have clients that they fit that model of destitute, right? They have no money, no income, nothing put away. So definitely we have those situations. But on the other side of things, I have a lot of clients that are multimillionaires. And so they come in and the normal person would say, well, you must be insane. Why would you do a reverse mortgage? You have
Right.
millions of dollars, right?
Right.
But the thing is that, as I mentioned, because of the changes they've made to this product and the improvements that they've made, this loan can fit just about anybody. For somebody with a lot of money, it's a great financial planning tool. It's a great way to manage money, to protect assets, to utilize tax, to limit tax exposure and those kinds of things. For somebody who has no options on this side of things, it's a way for them to use the equity that belongs to them to live better. And this is a tangent, but I'm going to go off on a little tangent. Took my daughter to a birthday lunch the other day at a fast food restaurant called Culver's. I don't know if you guys have that in your area, but
No, but I'm familiar with it.
it's a burger joint, right?
Uh-huh.
And so we walk in and we go up to the counter, and the lady that starts taking our order had to be over 80. And she's as sweet as honey. She was just the nicest thing. But as I was looking at her and realizing she's going to spend 8 hours today on her feet, is this really what retirement is now? Is this what we're working for as Americans? We're working through retirement so we can retire at 62 and then go back to work at 80. You know what I mean? It doesn't make sense. And so that's what we try to help people understand, is that whether you're on this side of the spectrum or this side of the spectrum, a reverse mortgage could really help improve your financial situation.
Most definitely. And I think too, I think when you're having the dialogue with a prospective client about a reverse mortgage, Trevor, is the family getting involved?
Hopefully. Not always. It's funny because a lot of times I have a client right now that I have to plan my visits to her house because she doesn't want her son to be there. Again, because of those old conceptions, but I keep encouraging him or her, bring him over. Let's talk about it. He needs to know what this is about, because the vast majority, I would say 97% plus of the time when I meet with the kids and they look at this and see the option, they're more enthusiastic about it than mom or dad are, because they understand that, hey, look, you've worked your whole life, you've worked hard your whole life. This is your home. This is your equity. We're still going to inherit a ton of money from it when you pass away. But the important thing is that you are protected and provided for the rest of your life. So
That's right. Well, it leads me into what I think everybody's waiting to hear. Right? It's that key question. It's the gotcha on reverse mortgages, right? What people think is the gotcha anyways. And that's, so this client of yours now has a reverse mortgage, and it's doing exactly what you said it was going to do. And now they get to that point where they pass on, right? They actually pass away. And now the family's forced to deal with this because the bank's going to keep the equity, right?
Such a good question. I'm glad you asked it. So let's explain the mechanics of a reverse mortgage, because the quick answer to your question is absolutely not. But to clarify it so people are going to understand, I need to give you the basic mechanics. And so a reverse mortgage operates just like every other mortgage in existence. And so if you've ever had a 30-year fixed mortgage, the idea is that I go to the bank, I borrow money from the bank to buy my home, and now I make a payment every month. That payment's going to pay back the principal of what I borrowed, but it's also going to it's going to pay back the interest that the bank charges me for the money that they borrowed me, right? A reverse mortgage functions exactly the same. You're borrowing money from the bank to pay off your current mortgage or to buy a house. And now the bank is going to charge interest based on the balance of your loan. But here's the one difference. With a reverse mortgage, you never have to make a mortgage payment. As long as you live in this home, as long as you pay your basic property expenses like taxes and insurance, you can stay in this home until age 150 and never pay the bank a single thing. And what's going to happen is the interest that you're being charged is just added to the balance of the loan. So your loan will slowly grow over time. Now the beauty about the new reverse mortgage is that the loans are structured so that the mortgage itself is designed to grow at roughly the same pace or slower than what the home is appreciating at. And so if your home's going to grow in $20,000 of equity this year, your mortgage will grow at something like $10,000 or $15,000. And so even though you never make another mortgage payment on your home, you're actually still increasing in equity most years. So that brings me back to your question. So what happens to the family when I pass away?
Right.
The beauty is that like any other mortgage, like any other home, this home belongs to you. And so when you pass away, all of your assets, including this home, will pass to your family, your estate, your heirs. And then they have the choice to either they can sell the home, they take the money that they got when they sold the home and they pay off the balance of the mortgage, and any remaining equity belongs to them. It's theirs. If they want to keep the home, great, they can keep it. They do a refinance, they pay off your mortgage, again, using the equity that's in the home, and any remaining equity belongs to them. The bank does not have claim on any equity in this home except what the homeowner borrows and the interest that's charged until they pass away. So does that make sense how I explain that?
That's perfect. That's actually probably the best explanation I've heard of a reverse mortgage to date. So thank you for
Thank you.
because I think that's one of the big things, and because we bring them up in conversations, and that is obviously the big misconception I think that people have. So, is what else am I missing? I feel like there might be some key points inside of the reverse mortgage, or things that you think that these the listeners might want to know as well.
Well, I for sure want to make certain that we highlight the key benefits of why would somebody do this. And there's the obvious reasons. It's, well, I've got a $1,500 mortgage payment and I only make $3,000 from Social Security every month, right?
Right.
For that person, it's an absolute life changer. They're able to eliminate all of those expenses. And so number one is that we're able to eliminate your monthly mortgage payment, which is for most people the greatest burden or the greatest expense we have on a monthly basis.
Right.
Number two, we can usually go a step further and consolidate other debts, car loans, credit cards, student loans. If they have other debts, we can roll those into the mortgage as well. And so again, no payments for life. They can access cash. You know, we can set up a line of credit that says, okay, here's $50,000 or 100 or whatever it is, and you can actually draw on that as you need it. So it becomes a reserve account for these people. But going beyond that, I want people to see the beauty of this, because not only does this free up their assets and their income, but it allows them to look beyond that. And so, for example, going to you, your financial or someone's financial advisor, they can say, hey, I've eliminated my mortgage payment now. I've got this extra $1,500 a month. What should I do with it? Should I buy an annuity? Should I buy life insurance? Should I buy long-term care insurance? How can I protect me and my spouse by using this money rather than just blowing it, right? And so again, it puts them in a better position to really plan out the rest of their lives. Because as you mentioned, you know, people probably don't know this, so I'm going to say it really quickly. When Social Security was implemented in 1935, life expectancy was 59. And so if you lived long enough to qualify for Social Security, you were already 3 years past your due date, right?
That's right. That's right.
So we're living to be 80, 81. I mean, I have a client today that's at 97. You know what I mean? We're living a lot longer, and financial plans are not designed for that kind of longevity. So
Yeah, you're 100%. And I'll just sort of make a note on that, to tell you something that you may not be hearing from financial people. And it's that effect of that product, right? And the effect of this process, I think, where somebody's able to free up. And in the example that you gave was somebody had a $1,500 mortgage payment. and we are, putting in place that reverse mortgage. These are people who stopped dreaming about the potential for what they can do in the future.
For
These are
sure.
people who resigned themselves to the fact that one of two things were going to happen. Either they were going to just continue to stay there, which they don't want to leave, and and continue to make that mortgage payment and suffer through it and not do the extras and not go enjoy their lives with their children and their grandchildren, or basically have to sell that house and now move into a place where rent might cost them more because they don't have to mow the lawn.
Yeah.
So it is, when we talk about these products and we talk about services like this for people, I think, because this is our role, like this is what you do, right? But I think it's far more important, and this is something that I came away from our conversation today and our previous conversation with as well, with is your story, like the story that the people get to tell after they work with you is powerful, right? It's now freedom. It's now choice and control, things that they haven't had for a while.
Yeah.
For those families who are destitute. And I think that the story on the other side of the card is equally as powerful. Those folks who are doing this, who maybe have a fair amount of wealth and are making these decisions because of estate planning, which is also a very exciting thing. But man, those stories for the people who are financially, in trouble and the money's really tight and they're able to now stay in their family home, that hits me in the heart every single time. So I'm sorry for waxing poetic on that.
It's that discussion of legacy, right? I don't know why it is, but when we hit retirement, we think our legacy is about money, and it's not. Our legacy is about the time we spend with our family, the memories we leave with our family. And, I'm the youngest of 8 kids. And so when my parents passed away and we split their inheritance 8 ways, it's like, this is nothing. You know what I mean? I'd much rather have my mom. I'd much rather have more memories that I had than I do with my mom. So that's a good thing to consider, is what is the legacy you're leaving, and can you improve that legacy by exploring these other tools or products that are out there? So
that's excellent. I suspect, you can tell me if I'm wrong, but I suspect we're probably going to be having more conversations together.
I hope so. This has been fun.
So excellent. Well, I want to be respectful of your time. I want to sincerely thank you for coming on and letting people know what it is that you do and how you're helping families. And how can people get a hold of Trevor?
So easy way is our website is heritagereversemortgage.com. I likewise have a ton of social media stuff. And so if they want to follow me on Facebook or Instagram or whatever, the handle is usually the HECM Guru. So just search HECM Guru and that should bring us up. And like I say, we're always putting out material to clarify some of these misconceptions that people have. So
I love it. I wish more people would do it, but I'm glad that you're the guy who is. So thank you again, and we'll talk to you soon.
Awesome. Thanks, Jeff. We'll see you, man.